Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. Just be out there viewing. Pay attention to the back of the class if you've not been watching my videos. I did one just a couple of days ago. Disregard the guff, guys. I just want to start with this. I just think that cartoon makes me think about how a lot of sellers and believers that the housing market cannot fall, that's how they're feeling right now. They're holding on, but they can't hold on much longer. Good evening, everybody. Welcome back. I know it's been a little while. I hope you all had a good long bank holiday weekend. Who do we have here this evening? Willie Bandit, Matt Lockie, Nick Jones, Fee, RJ, Catherine, Monkey Tennis, Crypto Bizzle, Richard Baker. Hi, guys. Yeah, Richard says the Guff mills are going into overdrive this week. That's very much what I want to talk about. So there's been too much news to go into. Alex is here. Excellent. Alex is in the green room. I'm keeping him on mute for now because he'll just distract me if I don't. Sorry, Alex. I've got to get something out. I've got to get this off my chest. It occurred to me in the last few days that there are so many people who seem to be basing their decision of whether to move or not to move on the news and on month-by-month house price indices. And that's not a reason to move or not, right? If you're moving house, it's a genuine question to anyone considering moving house. Does it make a difference to your decision to move, whatever happens to interest rates next month? If they go up a bit, if they stay unchanged, if they go down a bit, does that change your decision to move? Because what I realize is there's a huge crowd of people who are thinking of moving and clearly have the luxury of not having to move because they're thinking of moving and they're under no time pressure to move. And then there are people who need to move. And a lot of people, and I've said this before, get overly fixated on what's happening to house prices. And for avoidance of any doubt, my position has not changed on what's going to happen to house prices. And I'll go into it with Alex, Housing Stig, in a minute, right? This is not, people, whenever I say this, people say, oh, Charlie's changing his mind. He's changing his mind. He doesn't think they're going to fall anymore. Oh, Charlie, he was wrong. No. I promise you, I will be the first to tell you if I change my mind, number one. And number two, nobody wants to know if I'm wrong sooner than I want to know. And I am constantly looking for things that would change my mind about what's going to happen to house prices. Unlike a lot of my housing market commentator opponents or people who are on the other side of the argument to what I think is happening, it's not that I have a desire for anything to happen one way or another with house prices. This channel is called Moving Home with Charlie. It's to help people move home. It's not helping people move home depending on what's happening with house prices. It's not helping people move home if it's a good investment. It's not helping people move home, but as long as interest rates aren't too high. It's not any of those things. It's helping people move home. It's Moving Home with Charlie. It's moving home. It's not just buying and selling. It's for tenants and letting too, although I've barely had a single moment to talk about the renting market and tenants and landlords and all that kind of stuff. I am, and always have been and remain, impartial as to what's happening with house prices for the purposes of this channel. My agenda is purely to part the mist and clouds, the clouds of guff being pumped out by the vested interest parts of the industry, whether it's the lending industry or the moving industry or the media on one side or the other of the argument. And my God, how exhausting is it when you've got to remember this, whatever the topic is, the media likes to basically treat you like you're watching a game of tennis. House prices are falling. House prices are rising. House prices are falling. Interest rates are going up. Interest rates are going down. Someone says they're going to go up. Someone else says they're going to go down. And you're just like, and if you look at it, that's all that ever happens. They're going up. Well, someone else says they're going down. And it's exhausting. And if you're trying to base your moving decisions on news headlines, you will go mad trying to base your decision to move home on what's happening in the news headlines. This is why Alex and I did the video a few weeks ago called How to Work Out What's Happening to House Prices Without the News. And we looked at data that's publicly available data that tells you what trends are happening, that you can interpret for yourself, that requires no media, and you can actually decide for yourself what's happening. And I will link again. I mean, maybe Alex, if you want to put in the comments a link to your tweet, it's got all those graphs and charts for any newcomers here. By the way, welcome to new subscribers. There are lots of new subscribers. Welcome to all of you, and welcome back to all my existing subscribers. But if you are too hung up on what's happening to house prices, then I would suggest it means one or two things. Either your move may not be for the right reasons. In other words, your potential move, if it's for financial reasons, isn't the right reason to move. Or it's because you'd like the idea of moving, but actually you're afraid of the commitment to moving because it's a massive commitment. And so you're using the uncertainty in the news as to, well, I'll put off the decision, I won't move yet, I'll move it. Either way, it means you don't really need to move. But in either case, the news is not what you should follow if you want to move house, okay? Because I am assuming that if you're moving home, it's because you need to move home or because you want to move home, and it's got nothing to do with finances. And yes, I know some of you push back and say, Charlie, it's got everything to do with finances and everything to do with house prices, because unless prices come down, we can't afford to move. Okay, I get that. And you know, if you can't afford to move based on house prices today, either you've got to rethink what you want to buy, or you've got to wait until they come down, or you've got to save up more deposit, or you know, I can't affect any of those things. I also worry that some people watch this channel kind of latching onto things I say as I'm going to be the salvation that's going to help you buy a home. Well, I hope I help you buy a home, but if you can't buy a home for whatever reason, I don't think you can blame that on anyone, not me or anyone else, right? You can blame it on government policy. You can blame it on decades of policy that have led to buying a home being less affordable than it has been for decades. That you can do, but that's policy you have to blame. You can't blame people for it. And I've just begun to get a few slightly barbed remarks from people going, well, house prices haven't fallen as fast as you said they would, Charlie, and I still can't afford a house. Like it's somehow my fault. House prices are falling. Even though Halifax, the average house price that Halifax is helping to finance is going up very slightly in the last 3 months. Overall, on average, house prices are falling. There may be pockets and small areas where they aren't, but overall, on average, they are falling. And there is plenty of evidence if you want to go and look for it. If you are relying on news headlines to make your decision, you will go mad. Okay, either you're going to look for confirmation bias, you're only going to look for headlines that confirm what you want, which is not the right thing to do. Or you're just going to look at headlines and not read the articles, and you will be so confused by that you won't be able to make a decision. If actually knowing what's going to happen to house prices is what determines whether or not you're going to make an offer on a property, there is no alternative but doing the kind of digging that me and Stig have done. Actually, yeah, well, me and Stig to a greater degree of detail, but both of us have done. You've got to do that for yourself in the market where you want to live. I can only offer comment on the national average housing market. But here's the thing. Whether you are a potential buyer for the first time or second time, or whether you're a potential seller and you're trying to make a decision, this is the fact that I realized the other day. Unless you have an offer accepted, there is no decision to make. Right? That's what I've said down there below in the down there, right? If your house is on the market and there are no offers, well, deciding whether to sell or not is a moot point because you don't have any offers. And without offers, you can't sell. And if you're wondering whether to buy or not, but you haven't had an offer accepted on a property you want to buy, you don't have a decision to make. Up until that point, your decision is only, shall we go and view stuff? Shall we make an offer? Because even making an offer doesn't mean it's going to get accepted, right? Your actual decision to move is a fantasy, irrelevant, moot decision until and unless you have an offer accepted, whether you're a buyer or a seller. Okay. If you're a seller and you're deciding whether or not to sell, and I understand that question on its own is a bit of a. How can you decide to sell if you don't have any offers? You can't. And there are people agonizing over this decision. Should we sell or not? Should we sell or not? With no offers. It doesn't matter. You can't sell without any offers. And if, you've got to remember this, both buyers and sellers, until the day of exchange, English law permits you to change your mind. I'm not encouraging it or saying it's a good thing. It's just a fact, right? Until the day of exchange, when you talk to your conveyancer and confirm that you would like to exchange contracts, you can, and you have the opportunity to back out and change your mind. So the point I'm trying to make is, if you're overthinking whether to even go out and start viewing properties, stop torturing yourself. Just go out and view them. It doesn't cost you anything. There's no obligation. You can just go and view. Some agents might say yes, some might say no, but ask to view properties and be honest. If you're saying, look, we're in a position to buy, but we're not sure if we want to buy. Some agents will say, sorry, we're only showing properties to people who are committed to buy. Some agents will be, that's okay, we'll show you stuff. Get out and view. And if you're selling and you don't have any offers, then you're not selling. You're simply hoping that you're going to sell. If your house is on the market with an asking price and you've had viewings but no offers, you are not selling. You are hoping to sell. You don't have a selling decision to make. You don't have a selling decision to make until you have an offer. And so you need to, if you actually want to decide whether or not you can sell, as a seller, you need to say to your agent, could you please just get me an offer? I don't care what it is. Just get me whatever offers you can get. Because without some offers of some description, we can't actually make a decision about whether to move or not. And it's very difficult to imagine what your moving decision is going to be without offers. It's very difficult as a buyer to know whether you want to move into a house or not until your offer is accepted. And it happens a lot that buyers have offers accepted and go, actually, we don't want that house. We offered, and now that our offer's been accepted, it's made us go, no, actually, we don't want to offer. And this is frustrating for parties involved, but it happens. It's normal. It's not that, there aren't people deliberately wasting time. It's a genuine voyage of discovery. We thought we wanted to buy that house. I did it. Even though, I've been working in the moving industry for 25 years, and I remember putting a deposit down on a property that I wanted to rent in Southwest London. And then realizing, only when faced with the reality of the logistics of moving and everything else, and what it meant for various things in my life, that, I've made a terrible mistake. And I lost my deposit. I said to the agent, I'm really sorry. I know you're keeping my deposit. That's fine. So if you are agonizing, but you don't have an offer accepted, then you are needlessly torturing yourself because there's no decision to make, right? Until you've had an offer accepted, your decisions are only, shall I actually go and view properties? That's, which is not a big decision, is it? Go and view. If you're not sure, go and view. Or should we make an offer on a property? Make an offer, see what happens. You don't need to ask the seller what the agent wants. There's an asking price on it. You can just make the offer that say, we'll offer on that property because at that price we buy that property. 9 out of 10 people will say no. 1 in 10 is going to go, yeah, actually, you can have the property for that price. Woohoo! Happy days. But I suppose what I'm trying to get at is this endless arguing about what's happening to house prices is such a waste of energy in life. It's futile, because unless you're moving, unless you're actually having an offer accepted, it doesn't matter, because there is only one. If you're a mover, a home mover, there's only one market you need to worry about, and that's the market where you want to live, for the particular properties you want to live. So is it a flat or a house? Is it the top or bottom end of the budget of those flats or houses? Is it, what particular location is it? Do you know where you want to live? Have you made an offer? Because unless you have, and you know what you want to buy, there is no real decision to make, okay? I've actually linked to a video below called The 10 Steps of Moving House. If you want to be a buyer, there are 10 steps to moving a house, and you can back out of the process at any step up until step number 9. Only step number 9 is a commitment. If you haven't watched that video, in fact, that was the first private buyers live stream I did just over a month ago. That's actually gone live now. It's in the it's linked below. Go and check it out. The 10 Steps of Buying. So I'm hoping, my mission here is to help everyone to move house, right? As far as I'm concerned, the more people moving house, the better. No matter what's happening to house prices, the more that are moving, the better. If you're new to this channel and you're worried about negative equity, you should be, because I think house prices are falling. In most areas, they are falling, especially in first-time buyer markets, they are falling. There are some exceptions, right? There are areas where flats are actually doing better than houses. There's a noticeable effect of people downsizing, moving out of the more expensive to run properties into cheaper properties. That's happening. And those people who are downsizing have got the budget to go in and say, right, I'm paying asking price for that one. So that can create a sense of, well, that market's really strong. Well, the market for flats might be strong, but not houses. There are lots of strange and unusual demographics happening. In fact, there's an article on Bloomberg today, which I won't share now, about how the UK is sort of going round and round in circles, and what's the economy doing. But again, I'd ask you this. Is the news on the future of the economy going to affect whether or not you want to move house? Oh, my phone has frozen. Sorry, guys, I'm back. Let's just. I want to share a couple of things with you. So, this news came out today. And I've linked below to this page and also to the Bank of England page that was published today, where this data comes from. So you can go and check out the data source yourself. All right. But defaults are rising in Q1, and in the Bank of England report, they say defaults are expected to rise more in Q2. This is mortgage defaults, right? They rose in Q4 last year. They've risen in Q1 this year. They're expected to rise more in Q2 this year, right? So mortgage defaults are rising, and there is a reduction in the supply of mortgages, which is the official terminology for a reduction in the supply of credit, or a credit crunch, if you like. Okay. Tomorrow, by the way, I'll be doing 5 Facts Friday, and there's so much. So I'll go into all the facts tomorrow. I'm not going to do that tonight. I want to keep this live stream short. And what I want to do now is take a few questions and have a bit of a chat with Alex. I do just very quickly want to show you, before I do that, sorry, Alex, 1 second. The headlines in the RICS survey that came out today, just very briefly, just the headlines, okay? So on the new buyer inquiry, so this graph on the top right here, okay? That line is the 0 line, and everything below it is negative. So every region of the UK except for Northern Ireland is negative in terms of new buyer inquiries in the last month. Slightly less negative than last month, but still negative, okay? What else do we have? Yeah, look at these two. Again, regional price expectations next 3 months, all negative, okay? And yet somehow, some of the commentators managed to interpret the RICS survey, which I've linked to below, so you can go and check it out for yourself. And it's worth looking at because you can see your region, how your region's affected. Some people going, oh, there's optimism. And the only optimistic thing in that RICS survey is that Welsh RICS surveyors think that a year from now, house prices might be going up. And I don't have a comment on that, but like that's the only. It's amazing how the Guffers look at that report, which is overwhelmingly negative, even if slightly less negative than last month. But they go, well, it's less negative, which means it's positive. Good news, everybody. No. Look at it objectively, look at the numbers, put some numerical context into it, and you'll see that almost all the surveyors are saying prices are going to continue to fall in almost all regions except for Northern Ireland in the next month or 3 months. Go and check it out. It is worth looking at. So, okay, Alex. Hello. Sorry, I've kept you in the dark for a long time.
That's all right. I had a bottle of wine to keep me busy.
Oh, brilliant! Now, this is not a late night live stream, so we aren't past the watershed. So, how much wine have you had?
You're all right. It's only a glass so far.
Okay, I just got to put your mugshot up on screen for those who haven't seen you before. So, for newcomers to my channel, Alex Gramwater, who you can find on Twitter at Alex Gramwater, he's the only one of them, who's been affectionately named Housing Stig by actually one of my followers. I can't remember who it was, but it's just such a great moniker that it's stuck. So, Alex, I'd like to start by asking a question. I looked at some of the questions that are going on here, which is that it would appear, looking at all the news, if you just take a sort of broad brush look at all the headlines across the news, that there's no great news, but there's no bad news either, and everything's kind of okay despite everyone's expectations to the contrary. It's somehow all going to be all right, and we're going to have 3% inflation by the end of the year, apparently, and of course that means interest rates are going to come down, and because someone said so. I can't remember who it was, but someone somewhere said that interest rates are going to come down. So interest rates are definitely going to come down and everything's going to be fine. And mortgage rates are going to come down. And in fact, mortgage rates are going to get, no one can remember who it was. Let me ask anyone watching, can anyone watching remember who it was that said mortgage interest rates are going to go back down to COVID levels? Someone said that, and people have been latching onto it, going, "Yes, excellent, brilliant. It's a short blip of high interest rates, and all going to go down." What is your take on that narrative that inflation is going to come tumbling down, and along with it, interest rates, and it's going to be unicorns and fairies?
The most recent people who said that interest rates were going to head back to pre-COVID times were the IMF. Yes, so it's a fairly large organization and known around the world. They are also known for not being very good at maths, so none of their predictions have ever been correct. However, the problem is we are, as you said, we're sort of in the eye of the storm at the moment. So if you were to look at the bond market, it will tell you that we are heading for a serious recession. Okay. You look at the yields, and the 2-year yield is above the 10-year, which suggests that we are going to be heading for a dramatic fall. And if that occurred, then yes, inflation would be beaten, you would think. Interest rates might come down, but we would be in a massive recession. People would be laid off. And as we've discussed, the real key to house prices and affordability is not, in fact, mortgages in terms of interest rates. It is wages. If your wages don't keep pace, then I'm afraid you can't afford the house, no matter what the interest rate on the mortgage is. So, yes, that is a possibility. And yet, on the other hand, you look at the stock markets around the world, and they're always the last to fall. But you look at the FTSE, it's only 2% of its all-time high. But ordinarily, when you see the FTSE doing well, gold does not do particularly well, because you don't need that safe haven of a metal that you can pick up and hold. But gold has beaten its all-time record. So nobody really knows what is about to happen. What they know is that we're at a tipping point. So I go back to data in the UK. And for instance, we've known since the beginning of 2022 that interest rates have been heading up. They've headed up at 11 times so far. Mm-hmm. And we've known that there was a problem coming because it started being reported, not with house prices, just in general. But over that time, borrowing on credit cards has increased by £6 billion since January of 22. Now, that's 11%. That's the amount outstanding on credit cards. Now, when you're heading into an era where interest rates are the highest they've been for X years, you don't really want to be borrowing on credit cards, do you? You know, that's counterintuitive. You want to be holding as little debt as possible because you're going to have to service that debt. But credit card debt has gone up. In fact, all consumer debt has increased by 12 billion pounds, roughly, giving us a total of 210 billion of consumer credit, which is outstanding. That's the balance. We've also got 1.6 trillion of debt secured against houses. There is a lot of debt out there.
Yeah.
And we focused a lot on mortgage approvals for new houses.
Yeah.
But have a look at the remortgages. And what you find is that the remortgages have also fallen through the floor. And the natural conclusion you draw from that is that there are roughly, since November of last year, 100 to 125,000 people, or households, I should say, who are waiting to remortgage. They are currently on the variable rate, I would guess, because they believe that interest rates are going to come down. And so they're waiting to fix. They haven't refinanced. They haven't got a new mortgage. They've just let it go on to the variable. And that's fine if interest rates do go down. But if we find that they go up, which I believe they will, I still believe that they'll break 5%. I don't think inflation is beaten yet, although I do think we're going to head into a very serious recession, as we've discussed. But at that point, we're not there yet. And the MPC for the Bank of England have just got rid of their most dovish member and brought on another hawkish member who is likely to say at the next round, yeah, rates have got to go up unless we get some inflation information. So, yeah, there's lots of contradictory stuff. We are stuck right in the middle at the moment, and we don't know. Well, I did that survey on Twitter last week and gave 4 scenarios, including the one from, and they were an inflation scenario, a recession scenario, and a stagflation scenario. And the voting was absolutely equal between all three. It varied from between 26% and 28% of the audience on those three. And you go, well, so no one knows. Literally, economists I've spoken to, people who actually do it for a living, they don't know. I mean, totally different opinions. But the one consistent thing is, whether it's interest rates going up or whether it's a recession, either way does not bode well for house prices.
Right. Yeah. I mean, I agree with you. And I just... but like I said in the beginning of this video, if you, I get that. No, people like Sir Chris Watkin, who I've got on the screen here, my colleague from the industry here, who he and I agree on lots of stuff and disagree on some stuff. UK house sales slumped by 17% last week. Okay, wow, I didn't know that. I assume that's coming. Is that coming out on your stats show tomorrow, Chris? I expect so. If you are moving house, zoom out. Don't zoom in on the week by week, month by month stats. You'll go mad. Just zoom out and take the long-term view. I think the people who are at risk are the people who could buy now, but aren't because they think prices are coming down. Well, I don't know that there's much to be gained from doing that, unless it's going to be because this is the other thing that I think probably, and I blame myself for this, creating the impression that there was going to be a very sharp fall in house prices suddenly. It's never a sudden and sharp fall. If it is, then we've got much bigger problems. It's always a slide, hence the title of this video, right? It's always, and I've always said it's going to take 2 to 3 years.
Well,
to increase myself, I started out saying 18 to 24 months, but I've extended that because it is, Alex, you've always said this to me. You've always said things take much longer to die than you think.
Exactly. And when we discussed it, we said that it would be the second half of 23 is where you'd start to see the falls. But the bottom, depending on whether we are heading into just a recession or actually stagflation, could be either December of 24 or all the way through into July, August of 25. You know, this is not going to be a quick process.
I think I'll say this to any buyers out there waiting for a quotes crash. House prices, I still think, are going to fall 35%, but it's going to take we're 1 year into it roughly, so there's another 2 years to wait till they get down there. So if you're impatient to buy something, then get out there and view, because by being out and viewing, you've got a chance of finding a property that you go, do you know what, that property at this price, if they accept it, I'll move in. And that's what matters. I do think people who treat property as an investment, and of course there are lots of people who've done that kind of innocently, not out of any, greed. They're just going, well, hey, it looks like if we buy property, that'll be a good investment for our pension. I know people, sellers, who could have turned into weird zombie monsters when you start talking about the fact that the house is not going to be worth what they think it's going to be worth. It's you can almost see something behind their eyes change.
Well, you are telling them something they really desperately do not want to hear.
Yeah, but it's beyond. It's not like they like, oh God, Charlie, don't tell me that. I don't want to hear that. I see something like a switch flick in their subconscious. Like, no, I cannot process that information. I cannot. It's outside my scope of reference to accept what you're saying, because it means the life I thought I had, I no longer have.
Correct.
So yeah. Someone's asked a very important question, which is Stig a god?
I'm not allowed to discuss topics like that.
No, sorry. Yeah, so moving on. We don't ask Housing Stig about religion ever. Okay, I want to for a fresh answer to a question that I get a lot. I'm here for movers and not investors, and so whenever I get investor questions almost every single day. I don't offer investment advice. I don't have opinions for investors, so I can never answer questions about where should we put our money. That's not what I'm here to do. I'm here to help people move house, and all I would say is, if you're an investor, whatever the market's doing, if you're out there looking, that you'll sometimes find deals that fit your investment profile. So if you're an investor, keep looking. Just keep looking. It costs you a bit of time to look, but if you've got money that you need and want to invest into a property, whether it's to do it up or to rent it out or whatever, be out there looking. Make offers where you think you're going to have an offer. That just crack on, basically, is what I'm saying. Yeah, this is the other big slow motion effect. Keith Morrison asks, will the people coming to the end of low rates lead to a bigger drop? It's very, very hard, Alex. I don't know if you agree with this. It's very, very hard to quantify in any forecast the rate of effect of people coming off low fixed rates going on to high rates being forced to sell, because no one knows how many of them are going to be forced to sell, number one. Number two, some of them may not sell, they may move out and rent it out. Number three, there are things people will do to go to great lengths to not sell their house.
And you don't know what their individual balances are.
Exactly.
It's too unfortunately, you can look at it in a broad brushstroke and say, well, we think this may have an effect.
Yeah. But
to try and quantify that is impossible without data on every single person, circumstance and mortgage.
As I always say, the housing market is a market of a million anecdotes. But what we can say about that from a mathematical point of view is, as each month goes on, the number of people reaching the end of their fixed rate is going up.
Yeah.
And some of them are going to find that they're unable to remortgage because their house value has dropped, and therefore they no longer meet the loan to value criteria, and are automatically going to be put on even higher, the standard variable rate, which may well force a sale. And at some point, you get the cascade effect, where gradually, these numbers build up until there's a sort of tipping point of forced sellers.
Yeah.
That start having to accept the lower offers. They're like, we've got no choice. We've got to get out of here. Right? Whether it's, because it always makes sense. If you know you're not going to be able to keep up your mortgage payments, and there's just no chance of it, and you know that eventually the bank's going to repossess it, you got one of two choices.
To sell it yourself.
Well, number one, sell it yourself, because the sooner you sell it yourself, the less of a problem you're going to have, the less debt you're going to owe the bank. The faster you sell, in a falling market, the faster you sell, the more you'll get for it. Or you could decide to go, do you know what? We had a very high, and by the way, this is going to be considered an outrageous suggestion, but I'm not suggesting anyone should do this, but some people will do this. Some people will go, well, we only put a 5% deposit down. We're now in debt. we're just going to stop paying our mortgage and wait. We might get a year or 2 years before we actually get kicked out without having to pay anything.
Well, and this is where there's a couple of questions that asked this already. The government have already made it clear that they want the banks and mortgage lenders to show forbearance in the coming period, whether that be changing your mortgage to interest-only mortgage, whether it be offering breaks as they did over COVID, and certainly the government are going to offer support for people who end up on a universal credit by paying a percentage of the interest rate, the interest of the mortgage. All of these things are going to mean that it's unlikely that we see the sort of repossession scenario that we did back in the 90s, for instance, and even to some degree in 2008. However, how long can the government keep that up? Will the next government continue that policy? Or as another one of your commenters said earlier, how many institutions are currently buying up houses? John Lewis, John Lewis are not in the great financial.
They're not buying up houses. They're talking about developing buildings into apartments.
They are, yes. But there are institutions buying houses, and I think there's going to be more of that. So we are looking at a step change.
Right. Chris Dickinson says, if you think prices are going to drop 35%, no one should buy unless they're trading sideways or downsizing, he says. Chris, that is a purely investor standpoint, right? That is a purely investor standpoint, because if you are a buyer and because you need a home and you'd rather buy than rent, where you've got the uncertainty of a landlord who may or may not want to move you out, etc., and you're in a position to buy and you're planning to stay long term, and your own personal budgeting shows that you may well go into negative equity for a while, but your confidence in your job is high enough that you can ride that through, then it's still better to buy now. Because if you don't buy now, where are you going to live for 2 years? You're going to be paying rent in a place you don't want to live. And you can't get on with your life. And when you buy a home that's a long-term home you're going to live in, you start investing not just money, but time into it and turning it into a really special place that you love to be. And this is a classic example of a purely financial reasons as to whether you should buy or not, which is a massive mistake. It's a massive mistake. A home is a home first and foremost. And if you do end up making money on it, then great, that's great. But, that ship has sailed for the foreseeable future. Making money on homes
it will not be your pension,
especially in real terms. I mean, Alex, in real terms, how long till we get the house prices back in positive territory? I'd a guess. I mean, I'm asking you to make a.
We had the conversation. 2029, 2030. It's basically the next 7 to 8 years. And people will say, well, that's ridiculous. But in real terms, we didn't recover from 2008 until the Help to Buy started in 2013. It was sideways all the way across that after the drop across that period. I mean, tiny bit up, but very little. And we didn't reach the 2007, early 2008 peak until 21. So, why would this be any different?
Sorry, are you saying in real terms, house prices didn't recover to 2008 levels until 2021?
Yeah.
Wow. Look at this comment here. Christopher Watkin. And by the way, guys, Chris Watkins' data is pretty solid stuff. There have been, so that's 243,000 price reductions in Q1 on 500,000, compared to 119,000 in the same quarter last year.
Yeah, twice as many. When you do the calculation on the number of properties,
just in numerical terms, twice as many, but also so many more price reductions. So, which means I think Monk's Whiskers is right when he says a reckoning is coming.
Yeah,
it's just coming very slowly, but it really, really is. Okay, this is another question I wanted to ask you, Alex. Hypothetically speaking, but still within the bounds of reality, what events would need to take place for you to change your view that house prices are going to be falling quite a long way for a while? What would make you stop and go, hang on, something's happened that makes me think it need a rethink? What event or string of events would it take?
There isn't anything. Look, so let's work through the scenarios, which is why I put them in that Twitter feed. So the first one is actually inflation is beaten. Inflation is beaten. That's fantastic. Interest rates start to come down. The problem we've got is, as we've seen at the moment, we have had a large amount of inflation. Wages have not kept up with that. So unless we have wage growth, you're not going to be able to sustain the current house price.
So Aaron, let me repeat that in different words so that everyone's clear on it. What you're saying is, even if inflation comes back down, all the way back down to 3%, or even target 2%, and is followed by interest rates falling, house prices still aren't going to go up, because in real terms, wages won't catch up for some time after that.
Correct. And it takes about 8 months for the interest rate to really be felt. Yeah. So we only hit 4.25% in March. So you're not going to actually feel that until November, December of this year. So again, if they start cutting it down, you're not going to feel the effect of that interest rate coming down well into 24, depending on how fast they cut it. But there isn't enough. We're in too much debt. The issue is that companies and certainly the government, in terms of public sector, just don't have the funds to pay to raise real wages to match what has happened with price increases for inflation.
And yeah, Jeremy Hunt just today was being very, very clear that he's not going to be giving inflation-busting pay rises to the public sector.
No, so house prices can't possibly be where they are because they were pumped so much because of all the free money that came out through furlough. And I mean, that you look at the massive increase in prices from 2019 through 2021, all of that was down to, people not spending on holidays and all these other things because they couldn't go anywhere because they were locked down, but also effectively being subsidized. So that got plowed back into the housing market.
There's a lot of questions, so I want to try and crack through a few. Kevin Helton asks, in the run-up to the election, is there anything you think the government could do to prop up the housing market, considering the conservative voting demographic? Now, this is a whole topic that I want to do another video on. I'm probably going to do it with Alex in a separate video when we're going to talk about all the different political parties' approach to the housing market.
Mm-hmm.
Because I think if they chose to make that, I think whichever party chooses to pin its campaign on treating the housing crisis as an emergency to be solved in emergency style is probably going to be the winner of the election. Now, Labour put out a tweet saying that they've got an idea to offer a government-backed mortgage guarantee for first-time buyers, including giving first-time buyers first dip on new builds. Now, if that's the biggest thing that they've got, and they're also going to ban overseas buyers from buying entire blocks of flats, was the other one I saw. But if that's their big announcement, then no, that's not going to make any difference to the property market. What could the Conservatives do? Well, the Conservatives have chosen not to extend Help to Buy. It has extended in Wales, but not in England. And they've stated on the website that there's no plans to extend it. But let's just, I guess, Alex, what if in the run-up to the election, the Conservatives went, if we're elected, we're going to reinstigate Help to Buy? It had a big effect last time, didn't it? Your own figures showed that when they can you remember the numbers off the top of your head? There was a big
I can't, but the graph was, as I said, sideways from 2010 to 2013. And that was with interest rates, at 0.5%.
Yeah.
And obviously somebody went, Jesus Christ, nothing is getting the housing market moving. And as we know, the housing market is 16% of GDP. We've got to do something. So they came up with the Help to Buy. And, the prices from 2013 onwards rose relatively fast. I mean, not dramatically like from 97 to 2007. That didn't happen until we hit the COVID era. That's when you saw that sort of increase. But they rose reasonably from 2013 through until 21. And that certainly helped that, as did slow increase in real wages. Because
okay. Yeah. So you're going to say, so there was a slow increase in real wages at the same time. So without that, Help to Buy still isn't going to work, is it?
No, you need, wages are fundamental to everything. Again, going a little off topic, anytime the government say that they are going to underwrite or guarantee debt, rather than banks doing that themselves, and this has been the government's problem ever since the quantitative easing, at that point, they thought banks would go back to their old way of lending as they did in the late 90s, and everything would be boom again. But banks were a little bitten on that, and they didn't lend.
Yeah.
So they're not taking on these risks, which to some degree you're going, well, that's good because the lending led to that enormous crash and that was terrible. But from a government perspective, they need the growth. Now, if they underwrite this so that the bank is not at risk, as they did with the furlough loans, they said to all the banks, oh, don't worry about it. You can lend X percentage of a company's turnover and we will underwrite it for you. So the banks did literally zero checking when you applied for a loan. They would just hand them out. It was a bit like being in the late 90s again.
Yeah.
But if that happens, banks no longer serve a purpose if they're not accepting risk, and the government is. And that then leads into the whole conversation about CBDCs and the central bank replacing the retail banking and commercial banking sector.
Right. No, we're not going there now. That's a rabbit hole. Definitely up for that. That's a discussion worth having, but not right now. I want to get some questions. If we're going to buy a house during this crash, should we fix our mortgage for 2, 5, or 10 years? Is there a way to predict what interest rates will be? Hamza, thank you for your question. This is always a personal question that no one can answer for you except for your mortgage broker, because it will depend on all of your personal circumstances, the circumstances that are unique to you. What is the size of your deposit? How long are you going to be living there for? What is the scale of your income? How stretched is your income to make a mortgage? All of these things will affect the answer to that question. There is no blanket answer to that question. It depends on your personal circumstances, planned future moves, etc. Is there a way to predict what interest rates will be? There isn't a way to predict what interest rates will be, but the closest thing that predicts the interest rates that we can see is the bond futures market, which bond futures prices are effectively pricing in what they're expecting interest rates to be, but that's not necessarily a prediction. It's just, so expectations and predictions aren't the same thing, and they're frequently wrong. No one was predicting interest rates where they are now even a year ago, were they?
No.
So there is no way to predict what interest rates will be, which is exactly why every time you should read a story that says interest rates are going to come down, you should go, well, how do you know that and why? Right? It's just, no one can. Actually, Alex, I wanted to ask you why you think they're going to keep going up.
Because I believe that inflation there are certain sectors where there is not inflation, there are decreases, no two ways about it. But then there are other sectors where you're still seeing, I think as somebody pointed out last week, 16-17% inflation on food, for instance.
Yeah.
And I don't think central banks are ready to just take the foot off the gas at this point. The bond market are trying desperately to persuade them to. And you've got lots of people, and this is why I say we've got lots of conflicting messaging, saying that central bankers are absolute idiots and they raised rates too late, and now they're continuing to raise for too long. But they will keep going until inflation is beaten. So I still think we're going to break 5%, and then they will come tumbling down, I'm sure, as we head into recession.
Right, Lee Martin says, hi Charlie, I just had an offer accepted on a house that was asking 220 but accepted 190. Good deals are out there. Fantastic. Thank you, Lee. They are certainly out there, and well done for being out there and viewing and making your offer. Did you make your offer by email? Did you sleep on it and make your offer by email like I suggested? But well done. That's great. Jimmy Davis asks me a question. After seeing today's RIC survey, do you still think all regions will see at least a 15% price reduction? Yes, Jimmy, I do. Because let me explain. It's a good question. And today's RIC survey does show a couple of regions not showing price reductions that much. But RACS surveyors, who are the respondents to this survey, are reporting what they're seeing at the coalface of their local market and what their expectations and guesses are for the next 12 months out. But RACS guys are not economists. All right. And whilst it is the most accurate, or let's say the least inaccurate forecaster of house prices, right, it is not an exactly accurate one. So my view is still, I mean, might there be a region that sees a less than a 15% price fall? It's possible, I suppose. You know, there's one area that for some reason becomes bizarrely more popular than the rest of the UK and everyone moves there.
Well, yeah, I'll give you an example. The Aberdeen market has
Yes.
not risen at all for 15 years because really the house prices are linked to the oil prices more than they are to anything else, because all the industry there is the North Sea oil. So we, I hope, are going to start building the Rolls-Royce nuclear reactors at sites around the country.
Right.
So perhaps if you had housing somewhere around there, you
Yeah.
would find that actually they wouldn't fall at all. There would be enough people working on the building of the reactors that they would stay up. But we're talking micro markets.
Yeah, exactly. Yeah, absolutely. Thank you, Chris. Chris Watkin, giving us a bit of love there. You and I making some
Thank
sense.
you, Chris.
Right? Yeah. Right. I want to just see if there are any more questions I've missed here. Okay. Gavin Ward says, Charlie, you have previously said if you do not need to buy right now, wait. Yes, and I still say that. So I'm choosing to answer this question because there is subtlety and nuance here, and it comes down to a personal preference. So when I say let me define what I mean by do not need to buy right now. What I mean is if you are happy and comfortable where you currently live, in other words, if there is nothing that's forcing you out, like for example, imagine if you're forced to be living with your in-laws and that's actually putting stress on your relationship with your partner and it just makes you not want to go home at night. That's a reason why you might want to need to move. You can stay there cheap and everything else, but actually your quality of life is crap. I wouldn't wait. I'd get out of there for the sake of your quality of life, right? But if you're living in a rented home that you actually really like and there's no danger of being kicked out by the landlord and you've got nothing pressuring you to move, in other words, there really is no short-term advantage to your quality of life to move, then I would wait because prices are going to come down and there will be more choice. So I still say that, but it's not black and white, Gavin. It's not like, hey, if you need to move, and if you don't. It's delicate and subtle and nuanced, and it depends on your relationship and your work and your finances and your future plans and all of these things. They all have to be taken into consideration, and there is no black or white binary answer to this question ever. It's a personal decision every single time. And sorry, Gavin makes the comment, he follows up with this comment. It makes sense if you can save money or best. Yeah, if you can save money and get a better bargain down the line, but you're not climbing the walls with frustration where you currently live whilst doing so, then yeah, it makes sense to save money, get a better bargain down the line. But there are lots of people who want to move because they don't like where they're currently living, but they're worried about hearing house prices are falling, and that's putting some people off when it shouldn't. You will be so much happier living in a home that you've chosen, that you've bought, that you decided to move into and commit to, even if prices do fall, compared to where you're living now, if where you're living now is stressful or suboptimal in any way. Nick Jones asked an interesting question. Do first-time buyers have the most impact on whether the market goes up or down? Well, last year, first-time buyers were 53% of all transactions. So whatever anyone says, first-time buyers have a massive impact on the market, yes. Again, sorry, Gavin, what I'm trying to say is it's not just a financial. The considerations are non-financial, many of them. Lots and lots of questions here. Guys, I've got to wrap it up. It's gone way over. I was going to try and keep this to half an hour tonight. So much for that happening.
We're so good at timing.
Guys, I'm going to start wrapping it up. I'm just going to check there are any corking questions to answer.
There was one about commercial real estate.
Yeah, we're not here to talk about that.
Okay.
No, I can't do regional predictions, guys, or one area versus another area. Even if I had the data, I'd want to know, well, are you talking about flats? Or are you talking about houses? Are you talking about detached houses? Are you talking about top end or bottom end? It's impossible to make those generalizations. Chris says, nice to see Charlie and Alex back. Best channel on YouTube. You're clearly a man of very good taste, Chris.
Chris, you're absolutely right. Although the 90s crash wasn't that long and drawn out, the 2008 one was absolutely sharp dip and then stagnant all the way through till 2013.
Yeah. Right, guys. So let me just wrap this up with a couple of things. First of all, if you are out and looking and you are in a position where you think you're making an offer, make sure you've got your mortgage in principle ready, because if you have, it will give you an advantage over anyone else that you're bidding against. And if you don't have already a whole of market independent mortgage broker, then go to that link on the bottom of the screen, and also it's in the description below, mhwc.co.uk/mortgage, where I'll put you in touch with my hand-picked whole of market independent mortgage brokers. Why talk to those guys? Because different lenders have different offers for different people. And so the skill that an independent broker brings is they listen to your exact circumstances, your financial circumstances, your life, your situation, everything. And they will then know which lenders to approach to get the best offers for you. That's why it's worth going there. And those offers are changing week in, week out. The whole market, the mortgage market, is morphing and constantly evolving week in, week out. And those guys live and breathe it every single day. So by going to an independent whole of market broker, you've got a much better chance of getting a better mortgage deal. All right. So please do that. Secondly, so I've got my private buyers club where I'm overdue to do a private buyers club live stream, actually. But if you haven't joined it, it's in the link below again on the buymeacoffee.com link. You can join that, and we do private. And basically, I go through every single question, and it's a much more personal live stream. I try and do about 2 or 3 of those a month. Next one's coming up very soon. I'll be announcing it soon. So join that if you want to. There is an audio podcast of this, so if you missed it or if you haven't got long enough to watch these videos, just look up Moving Home with Charlie wherever you get your podcasts and you'll find it. And there's so much more to talk about, but tomorrow will be 5 Fact Friday. Probably do it as a simultaneous broadcast on Moving Home with Charlie and the Best Agent channel. And thank you very much, all of you, for watching. Hope you're all well. Remember, step back from the news, take a breather, zoom out, be out there viewing, because the only way to find out what's happening where you want to live is by going out and viewing properties where you want to live. On a happy note, it's goodbye from me. Goodbye from
It's goodbye for me.
Have a great night, guys, and I'll see you on the next one. Bye-bye.
Bye-bye.